What's going on, everybody? Welcome to a capital-hungry New York scalping and analysis session. It is currently roughly 8:15 a.m. Eastern, Thursday, April 27th. So not much to really recap from the events that took place over the last couple of sessions, as we're still going to be looking to continue from the last market analysis and trade ideas webinar. You can see across the board on equities, commodities, currencies, that we were primarily just ranging on the intraday perspective and didn't really have any reactive events come into play or anything new to price in. Now, hopefully, it would be ideal with the economic data that we have in focus in the next 15 minutes, we can get some one-sided volatility and continue to play and potentially, continue to look for a breakout of these consolidation zones, getting some easier trades to play as we start to form more of a trending market, rather than being in the secondary phases of market structure, which we can still see is looking like higher time frame consolidations. Now, in the example of gold, we've been primarily sticking to the bullish bias, only adapting to the sells when need be. For the example, like during our New York scalping sessions, if we get very optimistic data and we assess based on market sentiment, it's holding impact. Obviously, we're not going to be looking to buy at that time, but we've just been sticking more to the bullish bias, primarily based on the macro fundamental catalyst of the Fed pivot prayers narrative holding the most weight, and understanding market structure, how gold has just been ranging on a higher time frame bullish perspective, right? Over the last couple of sessions, we did have Asian extend us higher from the 1988 key level in the new daily candle open, as well as some solid continuation moves above 1997, but still not seeing enough buy side liquidity to be trading above 2005 and 2010. Then over the course of the last 6 to 8 hours here, you can see we've primarily been ranging from roughly 1997 to about 2001 price handle. Now, the main make or break catalyst, just in terms of whether we continue the secondary phases of market structure and see more consolidation, or whether we start to see a trending market, is going to be this collection of US economic data right at 8:30 a.m. Eastern. We're seeing some reporting on the labor market with jobless claims. We're seeing some reporting on US inflation with the PCE pricing index. And of course, at the same time, we also have some figures of overall gross domestic product with your GDP advance figures here, right? What would be ideal to still be respecting the Fed pivot prayer narrative and having gold trade above 2003 and 2010 is seeing bad GDP data feeding into the recessionary scare narrative, showing that the US economy can't handle the tightening of financial conditions, and the markets start pricing that information ahead accordingly. Inflation being declined, right? Showing some declines from prior, or of course, still being below this higher than expected forecast. That would also be feeding into the Fed pivot prayer narrative, showing that inflation is getting closer to the Fed's goals, so they do not have to keep such a hawkish, aggressive approach with tightening financial conditions. They can potentially start to look for future rate cuts. And with initial jobless claims, we would want to see higher initial jobless claims, showing that the labor market is weakening. More people within the US are filing for jobless claims, right? So what we would want to see to continue and have clean gold buys is this type of data reading. And this is pretty much going to be your standard type of impact on GBP USD, Euro USD. USD CAD is going to be more of the inverse, right? So that's why it's good to go through this and understand the data and the potential impact. So this is what would be ideal. And obviously, if you've been going through the educational webinars, if you're here on other days where we have multiple data reports at the same time, what we prefer to see, whether our main bias and prediction is right or wrong, is we prefer to see one-sided data that will lead to one-sided market volatility, right? So in the example of GDP advance, for us to continue to support the Fed pivot prayer narrative, US recessionary scare narrative, and see more demand into gold and an outflow out of the US dollar, this will need to come out lower than this already buffered forecast, because there's already economist and investor expectations that this GDP advance data could be dropping to 2.0. And you can see the minimum expectations are even expecting a drastic drop to 0.4. So if we still come out above this, it's not really going to hold that much weight or impact, as it's still well within the expectations and still above the forecast. But if this comes out at like 1.7% or lower, PCE prices here to feed into the Fed pivot prayer narrative, PCE prices would have to show a decline, showing that inflation is still trending downwards towards the Fed's macro goal of 2%. They're looking at CPI, but PCE is very similar, especially if you looked at that report I sent you guys in the main feed and trade room a couple of days ago. But here, they already have expectations that PCE prices from the advanced projections here can be higher by 0.3%, right? So we would need to be lower than the prior, or at least significantly lower than the forecast, maybe coming out at 4.5% or lower, and that would still be considered disinflation and inflation trending downwards, showing that the Fed's tightening of financial conditions, it's doing its job. Inflation is trending closer to the Fed's macro goal, and the Feds do not need to be as aggressive in the future with continuing to tighten financial conditions or do more rate hikes. So here it'd be ideal to see either the same or lower. And then with initial jobless claims to feed into the Fed pivot prayer narrative, US recessionary scare data narrative, we're going to want to see 250K plus here. Having data come out at similar figures or within what we're looking for to feed into the Fed pivot prayer narrative, this would be clean, one-sided volatility to lead to US dollar weakness and more demand and appeal for buying into gold for investors, the market makers. We just see it as the institutional algorithmic order flow adjusting within milliseconds, right? This would lead to pretty smooth sailing gold buys, in my opinion, above 2003, 2004 area, and would probably hold enough weight to have us actually breaking above 2010, right? Otherwise, if we don't get our main prediction of still holding gold, higher time frame bullish structure, still having dollar holding below 102 key price point, what I would prefer to see is all of the data feeding into the dollar domination narrative, right? And being pretty much the exact opposite of this. So again, this potential data outcome, or even worse, if the GDP is even worse, if initial jobless claims is even higher, if the core PCE prices is even lower than expected, give or take some minor liquidity grabs, this should lead to movement like this on gold, and that'd be a pretty similar situation on GBP USD and Euro USD, as dollar would obviously weaken. With USD CAD being more the inverse, right? Now, if this is incorrect, our prediction doesn't come out how we want it for the main bias, I still don't want to see mixed data. Mixed data is just going to lead to a lot of lower time frame indecision, very, very poor price action, an increased probability you're just going to stay in this range up until the more important inflation data tomorrow to close off the week. And it's going to make it very, very difficult to call out high probability effective trades that promote trading sustainability, and you would be able to repeat time and time again in the future. Basically, it's going to get really messy if the data is mixed, especially when you understand the price points we're still sitting at, and the essence of gold still just being in the same range, dollar being in this range from pretty much 101.2 to 102 now, seeing equities indecision, currencies ranging as well. It's not going to make that situation any better. Getting one-sided data would be key. Now, if the prediction is wrong, we want to be completely wrong with our prediction, and we want to see the data then feeding into the dollar domination narrative. What do we need in this data outcome to feed into the dollar domination narrative and see gold sells? With potential, if it is one-sided volatility, to even be breaking below the 1970s. We would need to see optimistic GDP data that takes away from recessionary scares, shows the economy is still robust enough to handle the tightening of financial conditions, and focusing on the fight on inflation, as Fed still see the fight on inflation as a bumpy road over the next couple of years and will be moving in waves. But for this perspective, I'd want to see at least being above this forecast, even better for higher than the prior to be considered optimistic. But I want to see at least like 2.3% or higher. And if it's higher than 2.6, even better, right? With the inflation data here, we already have forecasted expectations of being at 4.7% in terms of the change from the prior report, right? So if we're just a bit below that, it's not really going to hold that much weight or impact because economists and investors were already expecting that. It's already in the forecast. We're going to need to see 4.8% or higher, even 5% or higher. But we'll just say 4.9% plus, higher than the forecast, higher than the prior. And here on jobless claims, we're going to need to see a decline. $240K or less, right? This will lead to more strength in the US dollar trending back to 102, potentially even breaking higher. And this will lead to gold failing to break these liquidity zone highs, breaking below 97 and giving us some more confirmations of clearing the noise in this range and some pretty clean cut sells from 1988 and 1981 down. Right? And this would be similar type of movement on Euro USD and GBP USD with more of the inverse on USD CAD. Now, obviously, if we get mixed economic data, GDP advance is very good, but core PCE prices is still showing a decrease and initial jobless claims is relatively neutral. Then we have to use our experience, knowledge, and the concepts taught in Capital Hungry, look at market sentiment, key price points of interest, and lower time frame price action to see what side of this data is holding the most weight. We're going to have to see the impact on currencies in terms of looking at dollar. We're going to have to see what it did to equities, and we're going to have to see what it does to gold. And then understanding its mixed economic data, and we're still in an overall intraday range across the board, We're going to have to be more selective and a lot more patient with our trade ideas if it is mixed data. If it's one-sided data, whether our prediction is right or wrong, and we get one of these scenarios where we just get the clean sells or the cleaner buys, you can be a bit more aggressive with your entries because you're going to be looking to take advantage of that impulsive volume. But just as aggressive you may be with your entries, as a scalper, you want to be just as aggressive on the flip side of the coin with your trade management and securing some positions as you get some of those impulsive moves, closing trades fully, setting trades risk-free so you don't take a loss, right? You don't want to just get seduced by the greed as you're getting some impulsive profits. But anyways, so right now we're just ranging. We only have a minute left. Does everybody understand what's going on there? In the chat, GBP USD and Euro USD be similar idea. I would still see GU buys from 246, buys above 251 if we're feeding into the Fed pivot prayer narrative. Only see sells below 2415. Euro USD, same idea. I would still see key level buys above the highs at 1.1. Only see sells below 1.0985 with a dollar domination narrative coming into scene. GJ, this is going to be a bit of a struggle area, right? But we'll talk about that once the data noise settles. So, heavy whipsaw right now. My thing loads. We got, it looks like a 1 minute spike up to 2002, 1 minute spike down to 1991. It's all coming in the newsroom, but this isn't loading for me. GDP, so bad. How come this isn't loading for me, man? I pay so much money for this shit, but it's coming in the newsroom. So GDP is bad. I see that in the newsroom. 1.1 on the GDP. That's feeding into the recessionary scare narrative. Jobless claims 230. So we got mixed data so far, but I still think this is going to be feeding into the recessionary scare narrative. I think dollar's going to be turning potentially bearish after a liquidity grab here. If dollar can't break back above this order block, and if gold comes back above 1997 and 2002, we're going to be looking for these same trade ideas once the noise and dust settles. Right now, it is relatively mixed data. I would still only see sells below 1988. I would need dollar breaking back above that order block. Because we have initially mixed data, you can see what I'm talking about as it's not preferred, where you don't get one-sided volatility. You're getting these 1 minute spikes up and down 50, 60 pips. So it's something you don't want to actively trade. This is a situation where buy stop, sell stop, both gets fucked. Transaction declined. Who the fuck sent that? Sorry, I'm getting distracted there. And if you guys don't remember, the reason why I'm also being patient is not just because of the mixed data. If I'm gonna sue Reuters, man. It's not just because of the mixed data. It's also because we're going to be here for a few hours. We're going to be here till London session close. So we got time for some nice trades to take advantage of. So now let's jump into the lower time frame here. Right now, obviously, we had the mixed economic data. Core PCE prices is still relatively high as well. This still came out at like 4.9%. So we have this feeding into the dollar domination narrative that inflation's still high. This feeding into the recessionary scare narrative that that GDP was very low, so like well below the forecast, right? So we got mixed sentiment right now, and we're gonna just have to go strictly based on price action. Right now, we just had this indecision occur with mixed economic data. The least preferred scenario, really fucking annoying, as we're already in these higher time frame and intraday ranges. Pardon my language, but it's really annoying. It makes it a lot more difficult to trade US dollar pairs, gold, and equities. But we're going to be sticking to our same trade ideas. Right now, based on price action, we had this larger rejection here, bearish candle closed below 1997, and weaker bullish candle still failing to close above 97 key level. If we start to break these lows, we're probably going to fill the wick range. And if dollar starts to come back above that order block and the inflation data is holding more weight alongside the jobless claims, we'll probably get some pretty smooth sailing sells below 1990s in 1988 here. So we're still going to be following our pre-planned trade ideas of 1988 sells. I'd only be looking for buys, and we get good confirms for buys above 97 in 2004. Okay. Impact you can see on currency pairs is still relatively mixed. I don't really want to play any guessing games here on GBP USD. I'd feel a lot more comfortable with the key level buys, or of course, starting to break 2415 area for sells with dollar breaking back above the order block. Because right now, the inflation data, which should be in focus, in my opinion, was higher than forecast and higher than prior, still showing that macro inflation is elevated and the Feds need to do more weight to tighten financial conditions. And jobless claims was still relatively healthy as well, being below forecast and below prior. So it looks like dollar's going to be heading back above the order block and above 102. And it looks like we're going to be getting some of these gold sells, GBP USD sells, Euro USD. We're going to jump into the lower time to look for some adaptation points. And USD CAD, it'd be pretty clean, smooth buys, breaking above this consolidation zone above 365. So just as a quick understanding, and if you guys take advantage of the impulsive trades, don't get greedy, as a quick color coding, dollar domination data in yellow, Fed pivot prayer data in red, the GDP advance being very low is Fed pivot prayer data. These are dollar domination. Inflation's in heavy focus, and it was a surprising increase of 4.9%. So in my opinion, the dollar domination narrative should be holding some more weight today. Just keep in mind, of course, the volume and volatility. Even once the noise and dust settles into the new 4-hour candle and going into NYSE, as we're still going to be sitting here, I think we're going to see the dollar domination narrative holding some more weight today. Does that make sense to everybody? So pretty aggressive price action here, you can see. But if we still continue this sequence of events and don't correct these downside moves here, and we get the actual breaks below 88 for the safer sells, it's looking pretty clean to be going back down into these range lows. I wouldn't see any reason to be buying gold right now unless we come all the way back down to the 70s and don't break, or we see dollar reverse this upside and gold come back above 97. On GBP USD, on the lower time frame here, we're going to adapt to some sells before the key level, which would be if we break below these 1-minute lows and that last intraday rejection point. On Euro USD, we're in the middle of a range here, but we'll jump into the lower time frame in a second. UCAD is pretty clean cut above the key level. And US 30, we have to be a bit cautious here because if the dollar domination narrative is holding more weight and we see more demand pooling into the dollar, we see VIX come back above the 18.6 level and double bottom here, then we can see US 30 trend back down to 33,300, 33,250 here. I can only see any further US 30 buys if we come above 33,500. I think we're going to get some pretty nice clean trades into the new 4-hour candle as well. And once the noise and dust settles with those price action confirms, just some aggressive price action right now. But what I'm looking at is still lower time frame market structure, where I want to see if we hold below these areas and we're just having these bits of short-lived pullbacks and we start moving down in this fashion would be really ideal. I'd only see the buys above 1997 at this point. And with GJ, it's going to be a very mixed impact on GJ with the dollar domination narrative. And yes, we're still more on the bullish bias, but let's all be very realistic here. This is some terrible garbage price action just in a 50 pip range, roughly, right? I'd feel a lot more comfortable if we're going to be continuing the buys. When looking at market sentiment, we see yen trading below this price sensitivity area, which is just reacting to now. You can see roughly here where I'm marking off these X's. Yen trading below here. And GJ coming above 166.8 and 167. Looks pretty good to me. Otherwise, I don't really see any reason to be selling GJ. We might even see GJ just range until Bank of Japan, to be honest with you. And similar idea with GBPUSD to gold. We're just having some short-lived pullbacks, but compared, even though the candles are larger right now due to volume and volatility, what we're still looking to see is maintaining this sequence of events. Would you look for the buys above 1997 only with closures on the high? No, for scalps, we look for buys above 1997 on the 1 minute time frame. This is a scalping session. But yeah, this is a pretty clean range here. On GU, if we just have this short-lived pullback, going down to even revisit the key levels, pretty much 30 pips. Yeah, but understand to see the buys. And keep in mind how gold is still moving. We're still having this type of price formation. And keep in mind the 4-hour candle close as well. Very aggressive movement right now in the candles. Some of these candles are like 20, 30 pips in size. What was I saying? For gold buys, I would need to see dollar in terms of market sentiment reversing these gains and not being able to close back above the order block. Otherwise, if dollar closes this bullish in the next 4-hour candle, starts to come above this price sensitivity area, it shows us, based on order flow, that the dollar domination narrative is holding the most weight. And we're more than likely going to see us, whether it's through just this session or into the next sessions, trending back to 102, maybe even higher there. right? So what's going to show me the dollar domination narrative and the Fed's tightening of financial conditions is holding the most weight now is dollar continuing above here, above the order block, correcting that downside move, and VIX still holding this double bottom area, equities being a little bit softer. Yeah, if you took gold, we had the perfect price formation we were talking about adapting to these current candle bodies and moving down in this formation. I would have taken this profit with this impulsive move of 30, 40 pips. You know what I mean? But beautiful price action, right? Exactly what we were looking for. Even though the candles are larger because volume and volatility is higher, you still want to look for the same formation of price, right? So beautiful textbook trade there. I think we did a very good job of breaking down the data. Obviously, your stop loss would have to be adjusted to the volume and volatility, and you'd want it above these candle bodies. But I think that's a pretty good job adapting to data there and still getting at least 40, 50 pips out of the trade. But I don't want people just blindly following what I'm saying about price action. Did it make sense of why dollar domination was looking like it's going to hold a bit more weight? The magic yellow lines? Yeah, that was pretty clean magic yellow lines. But keep in mind reactions at the next key level and the new 4-hour candle still. We could still get some pullbacks. Don't get greedy and forget that we're still in these ranges, right? So don't get greedy and forget that we're still dealing with this shit. If we bust lower, it's going to be great. It's going to be gravy. We'll take some easy sells, breaking below 70s, but don't forget to zoom out. It's great taking advantage of increased volume and volatility and news events like this, right? Pre-planned data, but you also just can't get lost in the noise. I just joined. Can you talk about just joined Capital Hungry or just joined the Zoom? So what do you want me to talk about? I'm a little bit what's the question? Andrew, GDP was bad. Shouldn't it feed into recessionary scares and dollar bearish? Correct. But GDP was not the only important report in focus today. There was 2 other reports in focus, right? We also have inflation figures in focus, which even though it's a medium impact report, we understand inflation data has been very important to give signals towards Fed policy, right? And we had some jobless claims data here as well. Ali, we just broke it down, right? Higher inflation data feeds into the dollar domination narrative because it shows that the Feds still need to continue tightening financial conditions. Does that make sense? Remember, Fed's main mandate and focus ever since shifting their monetary policy from supporting the economy during the pandemic phase was fighting inflation and bringing inflation down. The Feds already understand that as they do the most aggressive rate hike, as they do the most aggressive rate hikes in history, obviously it's going to dampen and weaken economic activity, potentially going into a recession as a cost of the aggressive rate hikes is within Fed expectations, but their main focus is bringing inflation down. So if inflation reports are still high and elevated, the Feds need to do more work with their job. Does that make sense? In this situation of mixed data, after dissecting the data and understanding the possible impact of these outcomes, we use key price points to identify if and which report is holding the most weight. Exactly. So one, we understood what we needed to see in terms of these data reports to get one-sided volatility. Sadly, it's not our lucky day today. We didn't get any one-sided volatility. We got mixed economic data. GDP data was bad, feeding into the recessionary scare narrative, and is quite an important report. Don't get me wrong, right? But inflation data still being high, higher than the already expected inclined forecast and being considered a surprise, on top of jobless claims being significantly lower than expected, still shows the labor market is robust and still shows inflation's elevated. Both of these reports feed into the dollar domination narrative, show that the Fed still need to continue tightening financial conditions. Just based on the data releases, we were already 2 versus 1. Then, based on price action and market sentiment, we could see gold had this larger rejection, bearish impulsive move, and we were not breaking back above 97. We were getting weaker bullish candles. We have to understand, as you have increased volume and volatility, the candles are going to be larger in size. I'm saying weaker candles, but these are candles that are still 30 pips in size. But in relation to the bearish movement, you're getting weaker candles. We had pre-planned analysis where if the dollar domination narrative is holding the most weight, we see dollar picking up some strength on the intraday timeframes, and we see gold break below 1988. We're going to look for the impulsive and break and retest sells. We even understood that when we got this minor reaction, don't worry about it. If we still remain and continue this sequence of events, we're going to be continuing down below 88. With the increased volume and volatility, I advise traders that if you get 25, 30, 40, 50 pips in profit, to take your profit and live to scalp another day. As understanding gold movement, we can still have very aggressive pullbacks, and understanding overall market structure, gold at the end of the day is still in this range, dollar still in the same range. We're still dealing with the same poor market conditions and structure. We got the confirmations of the 2 versus 1 on the report, and the essence of 2 reports feeding into dollar domination versus 1 feeding into the recessionary scare narrative. We got confirmations of this liquidity grab wick on dollar and at least pushing bullish back into the order block. And then we got the price action confirmations with how, even though we had the increased volume and volatility, you can still see based on capital hungry concepts, we were moving down in this fashion. We wanted to take those sells below the 90s and 88 key level and took advantage of that piece of the pie with the proper confirmations. Not getting trapped in some buy stop and sell stop, not getting fucked in some spread spikes, just entering before news, not getting screwed in a liquidity grab, breaking it down and creating some logical trade ideas. Does that make sense to everybody? What? Yeah, it's crazy how your boy does it in real time, right? It's experience, just experience. Anybody can do it. Probably not as good as me, but still. But anyways, let's just wait. Obviously, if you're still holding these trades or you took these trades, that's fantastic. Now let's zoom out and see what further opportunities we can see on the new hourly candle in 4 hour. Now, this is looking good for us to potentially be still filling this gap in range to these lows here, right? What we can also see is understanding gold movement in this range. We could even still see pullbacks to the key level 88.5 into the new 4 hour, maybe even a deeper 50% correction of this impulsive move before continuing bearish here. And if we see dollar breaking back above that order block with some lower time frame bullish price action trending towards 102, then we'll also have a higher probability that that translates to us, the dollar domination narratives holding more weight with current data impact, and gold should probably be coming back down into the 70s here. Who's thinking too deep? What are you guys talking about in the chat? I think I missed some chat here. Ali, I think is too much thoughts just fucking with me. I know, but I tried my best to break it down step by step. You know what I mean? We had the pre-planned analysis and stuff like that as well. Just into the new 4 hour, we are getting our first signs. Don't ignore this, everybody. We are getting our first signs of sellers exhaustion. You can see up until here, when you're looking at order flow and price action, it is just into the new 4 hour, but still up until here, we were moving in this pretty clean sequence of events. Now we're getting this bit of a double bottom just shy of the 1981 key level conveniently, right? So keep in mind, understanding how gold behaves, I wouldn't be surprised if we get pullbacks a bit above the 88 key level for sells into this area, into the new 4 hour candle. Or obviously, if we just have short-lived pullbacks, break below these candle body lows, just above the key level at 1982, just for the continuation trades. Yeah, I agree with that as well, AJ. I agree with that as well. That's looking the higher probability right now. Also, keep in mind this PCE advanced data, it's not a direct indicator, but it does give us some pretty solid forecasting measures of the actual PCE data tomorrow morning, where there's a high probability, give or take some pullbacks and setups into the next daily candle, that these figures here will be elevated. This is the more important inflation figures to close off the week. And then we also have the consumer confidence report. So this is the new 4-hour candle. We can see the last hourly and 4-hour candle closed around 1984 here. So we'll see how this new 4-hour sets up. Keep in mind, I can see a bit of deeper pullbacks following this potential price formation. So let's see how it goes. GJ, we talked about that we could see buys above 0.8 and buys above 167, but there's a high probability, as the main focus is Bank of Japan rate decision, that GJ will just range and have poor conditions until then. But I'd still follow the same pre-planned trade ideas. Yeah, that's what we're talking. That's what we meant. Bank of Japan rate decision, of course. Bank of Japan rate decisions are always tentative, but usually anywhere from around, I find, 11 p.m. Eastern to roughly 2 a.m. Eastern. No, let's be patient here on gold for any further entries. I can still see us having some deeper little pullbacks and price setups here. But otherwise, we'll still get some smooth sailing continuation styles as well. Because don't keep in mind, we still have NYSE. Okay. Sorry. Got spammed with a bunch of messages. I always get spammed with messages after after every data report or rate decision or before and after. All right, GU. So this is intraday zone. This was just the 1 minute price sensitivity area we highlighted here of the last lows. Nice rejection here. I would prefer a double top for better confirms or continued dollar strength through the session up to 102 and GU breaking below here. I don't really want to be correcting this downside move. Euro USD, I'm not liking the price we're sitting in between the key levels. I need to be breaking these lows or get a retest of the key level at least. UCAD, I don't want to play this consolidation zone. I'd see the buys above 36.5. And US 30 stock market index, we're still just going to wait till NYSC. GJ, we'd see the buys above 0.8 and 167. Keep in mind the poor market conditions, less volume and volatility, and higher probability of these poor market conditions being held up until the Bank of Japan rate decision. But we could easily still get this scalp from like 0.8 to 167 if we break above. What I would also prefer is this data holding enough weight today where gold can potentially close closer to the range lows or be breaking into new lows. I don't think we're going to have enough volume and volatility to do that. It looks like we're just going to start to simmer down around the range lows here and probably have some bounces towards the end of the day. But it would be ideal just to get some more clean market structure and fundamental bias as well as one-sided volatility to feed into the dollar domination narrative, especially with expectations of higher inflation figures tomorrow to be breaking below here. And then that obviously correlating to dollar coming to 102 and higher. And then probably starting to see reversal signs on the higher time frame on these pairs like GBP USD and Euro USD as well. Higher inflation figures tomorrow should for sure do that. I'm just gonna grab some water, go to the washroom, but we're still gonna be here going into London session close hours, so get cozy, you know. All right, I'm back. So starting to get some normal volume and volatility, which is good. I was hoping we get the deeper pullback to 1990, 1991. We just got a perfect key level retest instead, but that's okay. We'll still wait for some of these continuation or NYSE trades. Ross, I imagine a liquidity grab to 1997 at NYSE before continuing down. 1997 would be quite aggressive because if we show these types of exhaustion signs at these lows and were to then come above 88 and have a full upside move to 97, you'd be completely canceling out the downside, and more than likely dollar would be reversing its gains as well. I'm not saying it's not possible. It's just not looking as high probability with the current price action and sequence of events. The first area of interest I'd be looking for if we were to have a pullback above key level would be looking in this area we were talking about, where you can see we had the original wick rejection, sell orders accumulated here before having a continuation of this sequence of events. I wouldn't be as confident if I saw a full pullback to 97 to sell again, especially if we see sentiment wise dollar reversing its gains. You'd be completely canceling out this whole bearish candle and just looking like it's going to range further. You know?
Oh yeah, man, that fucking thing is insane.
Since we didn't get the deeper retest, we had some nice volatility trades, break and retest trades. Didn't get to take advantage of this. I thought the 4 hour dig a little bit higher, but if we start to break these lows, we can get some earlier entries than key level around 1982 here. It's 10 pips earlier, but that does make a difference as a scalper, and especially when we see current market structure, where if we break below there, more than likely we come retest that area before continuing lower, or at least get another squeeze move to take advantage of, you know? Otherwise, I'm still expecting some deeper NYSE pullbacks. This was a lot better on the GU trade for the double top, but still not enough volume to be breaking below the last significant lows, having some aggressive bouncing of about 20 pips here on the 1 minute. So just keep in mind, if we break above here, we could get some deeper liquidity grabs. Right now, just showing some ranging on the dollar pairs. To see this dollar domination sentiment holding more weight with some confirms across the board, I'd like to see gold breaking below that 1982 area, USD CAD trading above 365, and dollar coming back above this order block at roughly 101.7-ish. Then correcting this downside move. Yeah, it can add on to it. It's just that pending home sales isn't going to hold as much weight when we already had the actual home sales data. That's why it's more of a medium impact report. But if it is optimistic, it can just further support our bias right now. It can add a little bit of weight to what we're already doing, you know? So yeah, that's good to look out for there as well. to hold these trades further and to take any further GU sells, we're going to need the breaks below 244, 2441, 244 flat there. And Euro USD, let's jump into the lower time frame. I forgot to do that. Euro USD would be a similar idea of pretty much at this point breaking below these 1 minute lows. We get much earlier entries than waiting for the key level. That'd just be 17 pips just going down to the key level. You know what I mean? Looks like dollar, the new hourly and 4 hour made a lower wick, didn't cancel out the upside move. If it starts to break this last wick from the data move, then we're going to start to trend higher here, break back above the order block, more than likely chug away and cancel out that downside move, trending back to 102. Some optimistic sales can support that as well. Gold, watch gold now, as we're potentially going to be breaking those lows we were talking about, coming to the next key level. And GJ, it's nothing crazy, but you can see the correlation here. The same time yen is coming below these price points and fading out that upside. We're seeing GJ at least come above 0.8, giving that 10 pip squeeze, now just holding 7 pips above. Even though the price action's poor, it could still chug away in the lower time frame, and this being the example of GJ movement, PPL to PPL, you know what I mean? Yeah, if you guys ever want to send any charts, questions, if it's not something that's going to be easily directed to the educational webinars, then obviously I'll answer it. But charts, we can always review charts, analysis, trade ideas you're looking for. Oh, sorry, I did not see that message. It got lost. Okay, bumping this up. Thank you. What is this? Hey, Jeev. Hey, Jeev. We spoke about this potential bearish move on gold during the London session. Of course, subjective to data release. We even see the possibility of the monthly flipping bearish and even closing bearish with wick seen as the previous monthly candles. I do see a high probability, like we've been talking about in the higher time frame webinars and past market updates, that gold can still see a large correction into the 1920s and 1910s, right? The only thing was, I was personally expecting gold to give us a sweep of the 2030 highs, because I have sell limits there. No, not just for that reason, just to retest some key price points of interest in the highs before sellers really come into play, right? But I already have expectations that if we don't see dollar break that weekly area we've been highlighting with fundamental catalysts to support it, which potentially at the end of this week can be higher inflation figures leading to potential weekly double bottom forming here, right? If we see dollar failing to break this area, we see higher inflation figures with the PCE, and we see dollar bounce, more than likely gold is going to be starting its wave and leg down of that correction we've been talking about to the 1920s. Have you guys been following some of the higher time frame webinars, gold market analysis webinars, where we review the daily, weekly, right? You just don't want to jump the gun on gold corrective phases, because you could be chilling at these highs for an extended period of time. People could be trying to get into the reversal cells here, getting swept out by these bullish moves. And then when you actually get the clean cut reversal, they wasted all their energy, they wasted all their capital, and then they end up sitting out when you actually get the clean cut correction, right? So that's what I'm looking for when I'm looking at fundamental catalysts and the price movement we're seeing here. If we get dollar domination coming back into the scene and we get higher inflation figures, that should be the potential start of getting a shift out of structure here and starting our corrective leg down, moving in this fashion into the 1920s before we potentially assess fundamentals at that time if we're going to hold that area or not. Does that make sense to everybody? So to answer your question, yes. If we have the higher inflation figures, dollar failing to break that weekly level and trading back above 102, we're more than likely going to see gold's corrective bearish leg start here, which is a pretty large higher time frame move from the 1970s into the 1920s, more than 500 pips, right? And then depending what's going on fundamentally at that time, we'll see if we're going to continue lower or potentially have buyers come back into the scene from better price points of interest. Does that make sense? Otherwise, you don't want to jump the gun too early, because if we don't break this area, the inflation data goes out of our expectations. Nothing stopping gold from still doing something like this, messing around, doing that for another week or two before seeing the larger correction. That's all I mean, is like you don't want to start to anticipate something too early without the confirmations for it. But this pathway of price marked in red here would be ideal and would more than likely start to take place if we have higher PCE data tomorrow. That will lead to for sure dollar going to 102 and more than likely breaking higher than 102. That would probably start the reversals. That would probably start the reversals on GBP USD and Euro USD. That would start this bearish leg in correction on gold, more than likely moving in this fashion, but going from the 1980s, 1970s down into the 1920s. Yeah, and keep in mind, we're not done this day yet. We still haven't had NYSE volume. We sometimes get even more movement with London session close hours. Gold still can potentially be going down to the 70s, maybe even be closing lower today. That would be great too. I would actually prefer us to see gold closing lower today. We take advantage of the sells. Tomorrow with the PCE data, you get a pullback into this area, and then you start to create your corrective legs down over the next week or two into the 1920s. That'd be even better. You know what I mean? But yeah, keep in mind now NYSE in 5 more minutes. So more than likely we'll see some pullbacks for NYSE before any of these continuation moves. Still getting a pretty solid bearish 30-minute candle close. Closing below this price sensitivity area, stronger bearish price action. Still have potential ranges to be revisiting the 70s here. Still have dollar holding some strength. I would have preferred to see it breaking above this rejection point. It broke a little bit higher, but at least it's still closing bullish there. Indicators? No, I call these my indicators. Market sentiment. Market sentiment is my indicators. Can you explain on US oil like what oil is? Like what do you want to know what you want to know the definition of crude oil, or what do you want? You want oil analysis, or for a for a scalping session, we don't really talk about oil. Oil with most broker spreads, as well as its lower time frame movement, isn't really the best to scalp. It's a lot better to day trade or swing trade oil, from my experience and expertise perspective. But just give me a more direct, clear-cut question, and I can potentially help you out. Otherwise, if you're talking about just some general information on crude oil, we have multiple educational webinars on it. And I did a fresh breakdown analysis just last week or the week before last week. So it's still pretty fresh and relevant, as we did a full educational breakdown, fundamentals, technicals, higher time frame to intraday. So I would advise to go check that out. Okay, NYSE open. So pretty solid bearish close. NYSE doing its liquidity grab and setups here, which is perfectly acceptable. Even if we get another key level retest, it'd be ideal. Otherwise, if we just get a short-lived pullback and come back below 81, I still see us more than likely going into the 76, 75 area. GJ still looking pretty solid just to be trending back into the range highs. We still have the confirms of yen weakness and being bearish below the 74.7 point. Dollar, I would like to see us trending higher through the session to play that dollar domination narrative. The sells were pretty solid from the intraday zone, but we still haven't had enough buyer volume in the dollar to be breaking below these levels on GU here. And Euro USD just in a little bit of a range. Same trade ideas still apply. Nothing really happening from a reactive standpoint. Just want to see if we can take advantage of NYSE volume going into the London session close hours. Understand, just because we're doing a potentially longer session today, we may be sitting at the charts. I'm answering messages on Telegram. I'm answering my emails. I'm scanning the newsroom. I'm doing the analysis on the charts. So with your own perspective, don't just be mindlessly sitting there staring at the 1 minute chart, looking to overtrade, getting the feelings of greed or FOMO or anything of that nature, right? Keep yourself productive and occupied and just be waiting for the key price points. Other than that, for the people who already took advantage of some of the gold sells below the 90 price point in 88, you can still sit here and observe to continue to learn as we break down price action, if anything comes to the scene, or as we break down headlines or any more key events if they come to the scene. But you don't need to take any more trades, right? What's also a very good training practice is anytime we run these sessions, our normal ones are 2 hours. If we do an extended one, it can be 3 hours and so forth. If we get the trades earlier in the Zoom session, right, just by chance, like we don't control when the markets move, we just have our pre-planned analysis, our price points of interest, and we look to take advantage when it comes to us, right? But if we get the trades earlier on the Zoom session, it's good training to still be sitting here, observing the charts, doing analysis, interacting, sharing some analysis, and talking about the markets, and still controlling yourself not to trade. Because a lot of people, they have this constant urge where the greed demon hops on your back and starts tapping on your neck, telling you to jump in another trade. Even though you've already made some profit, even though you already took a great trade, that greed demon always wants more. You know what I mean? So the main reason why people lose, it's not because they're not taking winning trades. Everybody takes winning trades. It's because they can't keep or control their winning trades, and they end up over trading. They end up over leveraging. The more trades you take, the more mental energy you exert, the more you lose your focus, the more emotions come into play, the higher probability you're going to fail. The higher probability you're going to fail, and when you take that loss, the increased chance you're not going to be able to handle that loss. Everybody has no problems taking a winning trade, but people have a very difficult time accepting a loss, especially after having some winning trades or being on a hot streak. They feel like, fuck, why did this happen to me? I don't deserve to lose this. I don't deserve to lose my profit. This is bullshit. And then guess what? They end up chasing, they revenge trade, and they make even more mistakes, right? So a lot of services, a lot of these different mentorships or whatever it may be, they may give you some signals, they may give you some analysis and trade ideas, but what they don't do is give the training and guidance on learning to control yourself, focusing on quality over quantity, focusing on your long-term goals and vision rather than your short-term internal desires based on greed, right? And you know what's really interesting I've noticed with the thousands of people that have come through Capital Hungry over the 3 years I've been running it is it's so interesting how people can get lost in their own mind, and they think that certain opportunities are never going to come back again. They get so lost into the price action, they end up crashing their account or destroying all their progress, even though the markets are here every single day. Every single day, scalps are taking place. Every single month, there's the same economic data reports in focus. There's the same central bank rate decisions. Every single quarter, every single month, there's new geopolitical tensions coming into the table, new fundamental catalysts driving market price. But people individually always feel like they're missing out, always feel like an opportunity will never come back again. That just shows you how illogical emotion-based thinking can make you, right? Simply looking at the markets from an objective perspective, it's always moving. There's always day trade opportunities. There's always scalp opportunities. There's always these various fundamentals going on, right? Always. But you can get so delusional and so lost in your own head and your own emotions that you feel, oh man, I just missed this opportunity today. Oh man, I wasn't able to take advantage of this. Fuck, I need to jump in something. This opportunity is not going to happen again. And then you end up making these crazy, foolish mistakes. You know what I mean? So, oh, beautiful. So we had some great trades today on gold, man. The 1988 sells, just a short-lived pullback, break back below 81 to our 76.75 target. Some pretty solid moves today on gold. Now, keep in mind, as we're zooming out, this is still fantastic, maintaining this bearish structure, bearish sequence of events we've been talking about, sellers printing lower lows, dollar still trending bullish and going back to potentially above that order block, but we're digging lower into those range lows. Now, even though we've had aggressive bearish price action here before many times, we've still had a struggle breaking below this area. It would be ideal for us to start getting closures below here just to finally get some cleaner market structure to be playing on the higher time frame and intraday, and doing what we were talking about when we were just reviewing the higher time frame there when we were answering that one question. GJ as well for the GJ buyers. Beautiful 0.800 PPL to PPL trades. As we confirmed, market sentiment of yen still turning bearish below these key price points. GJ at least, and even though it's in a range, trending back to the range highs. Very nice price action at the PPL. Very nice scalp play to take advantage of there as well. Dollar pairs, this area still holding, just haven't had the continuation moves, but it does look like it's bubbling and heating up to start having those moves. US 30, no trade ideas still. But yeah, does that make sense to everybody, that little psychology lesson? So everybody can take winning trades here and there. Everybody can teach you how to take a winning trade here and there, but learning how to control yourself, that's the key. Come on, gold gonna fill this daily wick at 72. Yeah, well, thanks for telling us that now, Bedna, as we're 15 pips away from there. Oh, everybody, round of applause. Thanks, man. We just fucking watched all this take place. And now you're saying, come on, man, we can go down to 72. Well done, everybody. And guess what? Because Bedna just said that, I bet a hard ass reversal is gonna come. Don't get greedy, man. Especially if you're a scalper or Even as a day trader, if you're in from 88, man, you got more than 100 pips, man. You know, don't be greedy. But yeah, I do still see us going to the range lows, but it's just funny. You know what I mean? You said that when we are like 15 pips away, man. Next 1 minute candle, freaking boom. Break even. After that, boom to 72. That'd be hilarious. Break even hit. After that, you're like, fuck this, man. Market's done. It's gonna range again. Then boom. China fake headline that China strikes Taiwan. Huge bullish push. And then right after, oh, false alarm. That'd be hilarious. Sorry, false alarm. Missed call. That'd be hilarious. Wrong headline, wrong headline. It's like that North Korea Japan headline where they said like the missile was gonna hit them. And then they said false alarm 10 minutes later, man. I was like, come on, not a false alarm. Somebody said, bro lost 40 pips already since he wanted 72 to get revisited. No, hopefully you took some profits already. Depending, I don't know your trade style, right? So I don't know what your swing trader, scalper, day trader. If I was taking day trading pips, I would have honestly closed level to level here. I usually do that. You know what I mean? If I was scalping, I would have taken the same pips because we got them with volatility, but I would have been looking to get 30, 40 pips. This is just this is a large, fantastic trade. It's like 150 pips. Don't get me wrong, I love catching my huge trades, but I like catching my huge trades in a cleaner trending market. You know what I mean? When I know like buyers are just printing higher highs, retesting previous highs, clean structure to play. Then I like holding huge trades rather than like trying to hope we get the melt here, you know? But I would love to see the daily candle closing lower. That would be fantastic if we can get that. Dollar still looking pretty juicy here. We're at least breaking below the previous candle body wicks. Pretty strong bullish price action. NYSE already did its lower wick creation there, breaking above, looking like it's going to be going back to 1019, 102. There was good intraday opportunities on gold for sure. Like if intraday you're going 60 to 80 pips, you still had great, like if you're sticking to, whether you're sticking to the bulls or the bears, if you were sticking to one bias and playing key level ranges, which are intraday ranges, like 88s up to 97, 81 up to 88 and so forth, you still had solid intraday ranges to play. You just had to cut your greed and actually take profit on them, right? The issue is a lot of people can stick to one bias and they can stick to their buys in this area, right? But as they start to break above the key levels, like, okay, this is going to be the time we finally break out higher. That's what happens with people emotionally. Then they end up not closing the trade. You end up having these large aggressive reversals. Then they end up getting pissed off that they didn't take profit earlier and they lost more than half their profit. They hope price will reverse again in the range and go back in their favor. It doesn't. It comes back to their entry. They're aggravated. They just end up losing anyways. Even though they had a great entry, they were in great profit, but they weren't being objective to both sides of the coin. They were only focusing on their profit side, not focusing on market structure. Are we breaking into the areas? Do we have any fundamental catalysts to break higher? Are we having continued dollar weakness? Right? And it's the same idea for the people where if you were just looking for sells the whole, I was primarily sticking to the bullish bias in this area up until we have fundamental confirms otherwise. Today, obviously, we even talked about at the start of the session, the only time we've been taking advantage of some of these sells is data induced. We take advantage of it during these sessions, right? Like we did today. But even then, we never got the breaks below this range. Dollar's still been below 102. So up until today, I've primarily been taking advantage of and calling the buy bounces. But when I take advantage of the buys, if I'm taking them at 81 or 88, I'm not trying to go range to range here. I'm not trying to have these huge expectations or even higher. I'm literally taking from 81 to 88, 88 to 97. And these are great intraday ranges, 70 pips, 80 pips. You get what I'm saying? Right? The struggle is people here, they want the whole entire moves and get caught in some aggressive wicks or pullbacks, or even worse, they want the move plus more. They want it because they're in the trade that, okay, I'm in this position. We should finally start, you know what I mean? Shifting structure now. Now, obviously, I'm objective. I don't have any married bias to any asset class. Like, I'm not investing in these asset classes. Obviously, now, even though I've been in that bullish bias over the last couple of weeks with the current impact of data, and obviously as I'm a fundamentalist, I like to follow the market economics, data, sentiment, and so forth. I would prefer myself to see a close below here today. You know what I mean? It'd make our jobs a lot easier going into tomorrow if we have higher inflation figures, continuing the dollar bulls above 102, expecting some pullbacks into this area, and starting to create our bearish legs down to the 1920s. I personally do not want to see us closing back above the range again. You know what I mean? Does that make sense to everybody? But yeah, swing trade opportunities, there hasn't been many swing trade opportunities. Yeah, I don't give a fuck if gold is bullish or bearish. I'm a day trader. I'm not an investor. You know what I mean? I don't have some gold fund. I'm not trying to invest in some gold stocks or mining companies. I don't give a shit. I just like to play what the fundamentals are, what's going on in terms of trend and structure. For example, our market analysis webinar last night was buys on gold. Those buys played out. Like, you have to understand from a day trading perspective, from Asian session in London, gold buys played out from 1980s back into the 2000s, right? You clearly could not be just selling during this time as you're going from 1988 back to 2000. If someone wanted to try high risk sells here, all right, I get it, right? But now going into this session, you didn't see me just saying, hey guys, let's just keep looking for gold buys. My market analysis last night was buys. Let's look for gold buys. It's like, no, we're going based on what the market is presenting to us. The market today is presenting some economic data with US GDP, jobless claims, and inflation. Whatever that data does is what I'm going to follow. I'm not going to just continue to look for buys because that was my bias. We had no problem seeing that the data was feeding into the dollar domination narrative, that dollar was pushing more bullish, that we could adapt to the gold sells below 88 down, right? We didn't have to be heroes getting caught in the wick here. We didn't have to play guessing games. 90 down, 88 down, still ran almost 100 plus pips there, right? And even though we were in this sell bias here and took advantage of the sells, I'm also objective enough to say, hey, everybody, don't get lost in the lower time frame. Don't just get extremely high hopes. We're still, let's just zoom out. We're still just coming back to the same range lows. I would love and prefer to see us breaking lower so we can extend trend, so we can have some cleaner market structure to play. But if we don't do that, don't get greedy down here and try to just catch a falling knife. I'm going to end up getting stabbed in the hand. You know what I mean? Right? So all I'm trying to say is I always try to be as objective as possible. And running Capital Hungry has helped me do that because I don't want to give people bad advice that leads them into stupid losses that were purely based on my emotions and feelings of what I hope to see happen in the markets. I would rather give the advice with clear-cut, step-by-step confirms, everybody having some conviction and understanding of why we're looking for those trades, identifying some key probability setups and ranges to take advantage of, giving those tips on trade management and risk management, right? Obviously, we're going to incur losses. Obviously, price action is going to go against us sometimes. Obviously, the market's not always going to do exactly what we predict or want, but following this methodology is going to 100% net you more gains in the long term of having plans, a systematic approach, knowledge of the fundamentals alongside the technicals, right? You didn't see me just say, look at the fundamentals. We're bringing together the data reports alongside impact to other asset classes, looking at key price points of interest, and it really gives you a clean picture to play, right? That's how we came across to take those 1990 sells, or some people got the 1981 continuations to the 75s. That's how we were able to deduct, okay, we had this great sell that we took advantage of, great downside move overall, but let's also be objective to the other side of the coin. Are we going to be breaking here today? Right now, currently speaking, we're still not, right? Now we just have some pending home sales data. What would be preferred is it's a medium-term report on rooters. Still seen as important data overall, though. But if this data is better than the forecast, even higher than the prior, still showing that the real estate market is relatively healthy within the US, that can further support a bit more dollar strength at the London session close and gold potentially coming back to these range lows, hopefully even breaking lower. Otherwise, if this data's poor and still bad here, then that's a higher probability we're just going to end up ranging, having some aggressive pullbacks. Ever since our boy said 72's on the way, we had, we had a 60 pip pullback. No, but to be jokes aside, bearish price action still been looking pretty good. You know what I mean? Still been moving down in a pretty clean sequence of events. Like this isn't really looking like strong, crazy bullish price action yet. Looking relatively slow and corrective. We'll see how much impact this home sales pending home sales data has in 5 more minutes. Dollar pairs are just ranging. Wasn't as fun, but gold sells were fun. GU, we had the data move, the impulsive break, the retest sells range to range, but pretty much since the data move over the last hour and a half, we've just been bouncing up and down 16 pips. So housing data isn't having much impact. It's just another report in focus today. You know what I mean? Coming out in the next 5 minutes. If you meant the last actual home sales report, it held a little bit more impact than expected because it was considered surprisingly optimistic data. It was above the forecast, above the prior, and above the maximum economist expectations. So it was surprisingly good. You know what I mean? So it held a little bit more weight. Also keep in mind, GJ still looking pretty nice and bullish, but I would prefer to see the hourly candles closing above 167 here and closing above these points. Then just seeing the new hourly make that lower wick, retest this area, and still continue this sequence of events up to 167.2. If we can remain above the range, still be respecting our bullish bias and analysis. I don't really want to see us like in the last couple of minutes snapping back below 167 like we've seen these times here, right at the end of the candle closures. I'd like to see a bullish close above. Yeah, a lot of people thought like I have a married bias to the markets. Like during 2022, everybody's like, "Oh man, Jeeve just loves the US dollar. Jeeve just loves the US dollar. Fucking dollar domination. Gold sells. That's all he cares about." It's like, "No, you dumb fucks. That's what's happening." You know what I mean? Mans were telling me during the entirety of 2022, all you say is dollar bulls. All you say is dollar bulls. And I'm like, "Man, what else do you want me to say during this entire period here, man? What do you want me to be playing? Sells? You want me to be looking for reversals every time? Every time we get a rejection? Right? So a lot of people, especially in the retail trading community, especially if they don't understand fundamentals or how to follow fundamentals, they think I have some married bias to the markets, especially during 2022 when dollar domination took over. All we were playing were pullback dollar buys, continuation dollar buys, which translated to GU and Euro USD was the sells, translated to gold was, remember, during this period of time, gold went from 2000s to 1600s. During this entire year, as a retail trader, it was not a good time to be selling the dollar or buying gold. Gold went down $400 an ounce, 4,000 pips. Dollar went from 93 up to 113. You know what I mean? We even adapted to this pivot prayer narrative this whole time here too. Back below 109 pretty much. We took advantage of the buys on gold during this period. Weakness and stuff on dollar. There's a lot of people who think they're like some type of magician or wizard, where like they just don't understand fundamentals and things of that nature, but they still just continue to try to play guessing games of calling reversals, and they might get some of these entries and think it's going to be a complete change in price and dollar's going to melt and Bitcoin's going to take over. But I don't understand the reasoning behind it. Okay. Holy, Reuters icon been slacking on me. I got in the newsroom. Negative data, right, for the home sales? Minus 5.2%, minus 23.2%. It came in the newsroom. Terrible data. So this might bring a little bit of indecision here and might prevent gold from breaking these range lows and might keep dollar a bit more stagnant. We might just see gold do something like this now, and then just not have a huge bounce, but probably just end up ranging for the rest of the day. It would be great if the data gets faded out and we broke below 76 and 72, but it doesn't look like it now. Dollar's still bullish though. At the end of the day, right? This is a medium impact report, and this is pending sales. Pending sales can always be adjusted and changed when the actual sales come out again, right? Actual home sales was still relatively healthy with the report we saw prior, like last week or earlier in the week, right? So this might not even hold that much weight being terrible data, to be honest. Looking at market sentiment, dollar's just flatline here, right? Just potentially can make a lower wick. It's not really that bearish or anything, initial impact. And yen is still bearish here, not really doing anything. Gold is probably just going to end up ranging towards the end of the day here. I don't think it's going to have a huge bounce. I think we might just end up ranging here now. No, we're at the 2-hour mark right now. We can do another hour till London session close, or we can do another the longer webinar tomorrow, because now I think the volume and volatility is going to die out here. What's telling me that is the fact that gold just came back to these same lows and rejected right now. The fact that dollar pairs are ranging when we're looking at like GBP USD and Euro USD here. We're not really seeing any significant movement on equities, just some indecision. And we're seeing dollar volume start to slow down a bit as well. So I'll leave it up to you guys for a vote. We can keep this session going for another hour. I got no problem observing price action, breaking down analysis, calling out some more trade ideas into London session close. Or we can do another session just like this tomorrow to close off the week. Now, I don't know if this is going to sway your vote at all or not, but tomorrow we also have some important economic data. We got all the important inflation figures here at 8:30, and we got Chicago PMI, and we got consumer confidence. Yeah, tomorrow then, right? Tomorrow? Looks like everybody's saying tomorrow. Right? No? Someone said no. I don't know what the no means. Tomorrow, yeah, tomorrow. I think that Bank of Japan rate decision is going to be the expected priced in dovish monetary policy, and this is going to lead to a priced in move. It's going to lead to yen spiking up first and then potentially fading out that move, continuing bearish, which on GJ can lead to a pretty aggressive intraday liquidity grab that could be anywhere in the range of 100 to 150 pips before still continuing bullish and fading out the liquidity grab. If that answers your question, WB. Does that answer your question? The only way I see GJ turning bearish and yen turning bullish is if we get some surprise hawkish changes. But everything looks like they're going to keep it pretty much status quo. There's not going to be surprise hawkish changes. There's not going to be surprise any further dovish pressure. You know what I mean? They're not going to like lower interest rates more or do more bond buying. They're probably going to keep everything relatively status quo, the expected priced in loose dovish monetary policy. But because it's expected, well known, and forecasted, it can lead to a liquidity grab first. All right, everybody, then it looks like we have a collective vote to just do another 2.5 hour, 2-hour session tomorrow, maybe even 3 hours tomorrow if we get healthy volume and volatility. Tomorrow we'll be starting our session around the same time at 8 because we have data at 8:30, 9:45, and 10 a.m. Eastern to close off the week. What would be ideal is inflation figures still being higher across the board. That will lead to dollar strength and breaking above 102, and that will finally lead to gold breaking below the range lows. If we do not get those confirmations, at the end of the day, we're going to be able to take advantage of trades. But if inflation figures are declining and the other economic data is still relatively mixed, or we just get mixed data, more than likely dollar's just going to end up ranging, gold's going to end up ranging still, and then we're going to continue those poor conditions into next week. What would be ideal after the data we had today, and especially when we're looking at structure, just before we go here, what would be ideal with the more exhaustion signs we're getting around 101, with the data we had today, is tomorrow following up with high inflation figures and optimistic consumer confidence. This will lead to dollar going to 102 and breaking higher. This will give us clean market structure to play into next week of dollar strength and dollar domination coming back into the scene. That will be the start of reversals and bears coming into play on GU and Euro USD, and gold breaking and trading below the range lows at 1970s. That would be ideal tomorrow. How long do you think Bank of Japan is going to keep the loose monetary policy? I think at least through this year, maybe even into the first 2 quarters of next year as well. Because inflation is towards their goals and pretty much at their goals, but they want to make sure it can sustain those numbers in terms of inflation without the continued support of their loose monetary policy, right? So they want to get inflation to their target, then they want to hold it to their target for a sufficient period of time, make sure the economic activity is healthy, and then they can probably start to change their monetary policy path. But so far, from what we've been told from the signals of the Bank of Japan reps and even the new guy coming in, Ueda, right, is everything is going to be pretty much status quo, keep the loose monetary policy. They still want to keep focusing on the same goals. There's no Asian session on Friday. Unless you mean tonight. But tonight, Bank of Japan rate decision is tentative. So it can be anywhere from 11 p.m. Eastern to like 2, 3 a.m. Eastern. So I don't really want to personally be sitting there at the charts during Asian hours, just hoping and waiting the Bank of Japan will come out soon. It's not like they're not really like the Feds or Bank of England where it's exactly at 2 p.m. or it's exactly at 8 a.m. The Bank of Japan has always been known to be tentative. Sometimes they can give out a scheduled time and say 1 a.m. You know what I mean? But it can be anywhere from that range of Asian session hours and Japan's normal business hours for that day. Let's see if we got a scheduled time. Actually, what's today? Yeah, see this? So there's no countdown because this release time is approximate. So it's an approximate time just during the Asian session hours on the 28th daily candle period there. Ever since that man said we were 15 pips away from 72, we never looked down again. How do we know that was gonna happen, man? It always happens, right? Or we're almost back to his entry again. And then fucked us over for any continuations. It always happens like that. No, it's because of the home sales data holding a little bit of impact and just overall being in ranges still. But yeah, it's funny to blame somebody, you know, makes it funnier. All right, then we're gonna come back tomorrow. Obviously, we'll do our market analysis and trade ideas, but the market analysis and trade ideas is looking pretty standard to the last ones if we're just going to be in these ranges, where we're still going to have some range trades overnight, and then it's going to be purely data dependent for US dollar pairs, of course, US equities and gold on the inflation figures and consumer conference in the morning. Inflation figures having the most focus. All right, everybody. Save this as an educational webinar. We can. What should I name it? Like, I don't know what to name. Like, I'll educational webinar live session example. Education webinar data live data example. I don't. Sure. We'll add it to the vault.